All right, good morning, y'all. Happy hump day. Let's jump right into it here. But I hope you had a good long weekend. But let's look at Tesla here first. So, Tesla. Been wanting to buy a dip here, which, if you look at the pre-market, there is no such dip to be found. So, obviously at this point, let's say we open up around 760. 760 is going to put you 2.5 ATR above 21 EMA. So don't get me wrong. I think potentially we're looking at one of the better weekly squeezes in the market. You've got 1, 2, 3, 4, 5, 6, 7 weeks in a row, consistent closes above the 21. If we pull this up here, the histogram is positive. So you have fresh bullish momentum here on the histogram. And in terms of fresh bullish momentum, we're getting that for the first time on the weekly since last November. So as you go into that consolidation and then you get that fresh momentum, you can have some pretty good moves ahead of you. So histogram looks good. We are above the 21 and you've got stacked EMAs. So I do think rest of this month into October, into November, December, into next year, Tesla hasn't been trending for the last, let's call it 6 to 7 months here. I do think the weekly squeeze has got all the potential in the world to get Tesla back into a trend. And what I mean by back into a trend is we're buying dips. We're getting long every squeeze. We're looking for those good, clean trades, but you're doing it with that wind at your back, so to say. So I think the weekly's got all the potential in the world. In the short term, pursuing that move that could start with the weekly squeeze, you got to pick your spots wisely. And up here at 2.5, 3 ATR, at least in my book, it's the worst place you could possibly get long. So waiting on a dip here, waiting on a dip. Now, what would be solid this morning? We're going to open up about $10 higher. So good little pump here this morning. I do have a couple positions here, and these aren't options room trades. I don't have these in the mastery. So these are all on my lonesome. But I got a put spread here for next Friday's expiration at 695, which probably end up closing here. And then I got October 15th. And I got put spreads down here at 700. So I want another one. Potentially, just kind of line things up here. Let's say I want to sell a put spread down here near, the daily 21 EMA. Well, we could do that right now for October's expiration. We could go with 710 by 705, and in $1.40. It's not the worst risk reward I've seen. It's not a bad risk reward. Just the major thing you got to take into consideration here is as we're up here at 2.5, 3 ATR, you might get long. Granted, you might have a nice risk reward. You might have plenty of time till expiration, but there is just that probability that you might have to sit through a pullback. So all that is to be determined. My game plan here is on the gap up this morning, try to take my profits, and if we could get a little flush, even back down towards the 8 EMA, I'm looking to get long for October monthly expiration with a bit of a bigger position here. So that is the scoop on the almighty Tesla. And I'm curious, have any of y'all been trading Tesla here? Because I do know we've been covering this one for the last few weeks. You had a solid daily squeeze here. You had another one here. So definitely one to keep an eye on. We'll see. We'll see if we get the dip. But aside from that, as far as open positions in both the mastery and the options room, we got positions in Snapchat. I think a great looking daily squeeze. The histogram is not quite positive yet, but it's trying to get there. But I think if you can be patient and you can sit through the back and forth, this looks pretty poised for a move back into the highs. So I like Snapchat. Snapcrap, I like SQ here. So we got to put credit spread on SQ in the mastery. And another one where you're holding structure, but you don't have a positive histogram yet. So until the histogram goes positive, check out over here. Until the histogram goes positive again, probably going to be a bit of a chop fest. Now, I like to get in here a little bit early. That way, once it does wake up, I'm just taking profits versus chasing it. So we're long Snap, we're long SQ, we are long XLV. I think one of the most bullish sectors, one of the more bullish trends in the market. So I think you buy this on pullbacks to the 21 EMA. And then last but not least, we are long advanced micro devices, a little bit of AMD. And I'll be looking for AMD to get the party going sooner rather than later, as that histogram is going positive. Stacked EMAs, bunch of green 10x bars. And that's what we got there. So for room trades, we got SQ, Snapchat, AMD, and healthcare. And then all on my lonesome, which is never fun, I got some Tesla here. So 762, 763 is where we're going to open up. Pretty damn extended. So that's what we're rocking with right now. Let's take a look at the futures. So here's what I think could happen. Might not happen. Here's what I think could happen. And you take this with a grain of salt. Well, I suppose, let's look at the 8 EMA first. So you get your blue moving average here. If we come on back. If the market holds at 8 EMA, so let's just kind of mark that up right here. But if we just hold the 8 EMA, it's going to be a bit of a chop fest. What you're looking for at this point, if that is going to be support, what you're going to start to look for is a series of lower time frame squeezes. Now, right now, you got a 4-hour, but that's not doing us any good. The 2 hours probably a little bit ugly. So generally, it's a bit of a chop fest here. I do think if we can hold that 8 EMA, you got to be a little bit patient for this, but you look for a good-looking 30-minute squeeze. Stacked EMAs, green 10x bars. You look for some kind of bullish structure under the surface on top of your 8 EMA. Not right away, but ultimately, it could give you your next push higher. But the alternative here, if we just you look at this most recent push before this one right here. You had a daily squeeze, you had a good push. You're getting up here into 2ATR. Then you just kind of come back in a little bit, and you get a good 3 or 4 days of chop. But with that chop at the 21, we get a brand new daily squeeze. And that can give you the next push to the upside. So if we hold the 8 EMA, could be a bit of a chop fest. Ultimately, you might make a move to the upside off the 8. Or if we do dip to the 21 here, I could easily see the market doing a little bit of back and forth. +1, -1, just a bunch of chop around the 21 EMA, which ultimately should give us a new daily squeeze. So we'll see if that's what happens here, but we're basically flat this morning. We're holding the 8 EMA. All checks out. And then for the Qs here, it's all about the 4-hour squeeze, I think. So you got a daily squeeze firing long. From one perspective, you're a bit extended, but from another perspective, on top of that 8 EMA, you got this bad boy. Big old 4-hour squeeze. I think you want to focus on this one. Focus on this one big time. This 4-hour squeeze, it could fire to the upside. There's our next push of momentum. Vice versa, it could fire to the downside, at which point that would be interesting. A 4-hour squeeze firing to the downside here could get you to the 21. Regardless, though, I think you keep an eye on that squeeze, and whether it fires long or short, at the very least, ain't nothing happening inside the squeeze. So if you're taking trades that expire in 3 to 5 days here, just understand if the market is stuck inside of a 4-hour squeeze, you probably don't have too much wind at your back. So keep an eye on that one. But to me, the market is bullish here. And even if we do dip to the 21, even if we dip to the 50, let me pull up a weekly chart for you. Even if we dip all the way to the weekly 21, call it 14,600, and we're talking about the Qs here, but I feel the same way on the S&P 500. I'm bullish all the way down here at the weekly 21. So being patient. But in terms of trades I would like, there's a couple of groups I want to buy the dip on. So if we do get a dip here to the 21 EMA for tech, I would certainly get long. But I don't want to do that up here. If I can do it back here, I'm taking home some paychecks on that move, just like we did with Facebook. Facebook's at the 21, but so is the QQQ. So you catch that group move. We did it with Apple. Apple setting up, so is the QQQ. With all of them extended right now, it's just not the same trade. So if the Qs come back down to earth, I'll be looking for Apple. I'll be looking for some Facebook. I'll be looking for some Google, and probably some Amazon. We're all a little bit too extended here. So waiting for a pullback in tech. I like the semiconductors. I think you got a great weekly chart. So if we got a dip here to the 21, I'm probably going to go over here and look at NVIDIA. NVIDIA is crazy bullish. I can get long back here. I can't get long at +2 ATR. So I would take a dip on NVIDIA. Broadcom here, I think, is one of the better looking weekly squeezes in the market. I suppose you could have got some yesterday. I would take a dip here. So I like the semiconductors. I don't necessarily like loading the boat when it's for this extended. So I would take a dip there. However, I don't think you need to wait for a dip here in AMD. I think as it currently sits in this daily squeeze at the buy zone, all the bullish momentum in the world, I think you can get some now. Just keep in mind if the semis dip a bit, AMD's probably going with it. So put those two groups on your pullback watch list. Technology, semiconductors. In terms of a few groups I think you could get long now, one is definitely healthcare. So you have a daily squeeze. We have green 10x bars everywhere. I think one of the better trends in the market. So until the trend comes to an end, I think you're looking to get long pullbacks to the 21 EMA. Now, I don't think you place a bet that it's back at 138 by Friday, but if you can give it 2, 3 to 4 weeks, I do think the trend has got a pretty good shot here at continuing. And you're not extended, so you could look at a UNH. We don't have a daily squeeze, but you got squeezes everywhere else on UNH. You could look at a Pfizer. The daily squeeze there, or keep it simple and just take a trade on XLV. So I think you can buy XLV at the 21. I also think be patient. I'm going to watch financials here. A little bit sloppy yesterday, but it's all within its average true range. So just a daily squeeze, daily squeezing. I'm probably not going to get long here today, but over the next week, 2 weeks, the daily squeeze continues. Everything looks bullish. We hold structure. Then I would like to get long something in the financials for the next push to the upside. Great looking daily chart, but you also have a great looking weekly. So in terms of financials, you could take a trade on XLF. I would probably lean towards Goldman, just because historically Goldman has been pretty good to me. You got good premiums here. So there's your stacked EMAs. So it's got structure. There's your green 10x bars. It's got bullish momentum. And as we got a new daily squeeze here, if we could get it into 21, you let that squeeze develop. But then I think that gives you your next push to the upside. So healthcare, I think is buyable here. Financials, with patience, I think I'm going to be looking to get long. And then last but not least is the home builders, ITB. Very much like the financials in healthcare, beautiful weekly trend. Really good weekly trend. So you got a weekly squeeze. You have got a 3-day squeeze, and then you got the daily. So a little bit of triple squeeze action. I'm not going to look to get long for a trade that expires this Friday. I'm not going to look to take a trade that expires next Friday. But out into October, November, I think it's a pretty high probability trade that this trend can continue. So within the home builders, you have got Dr. Horton, crowd favorite. You have got LEN. You have got Home Depot, which is probably my favorite here. Home Depot's got the triple squeeze going. Daily, a great looking 3-day. And last but not least, your weekly. So there's 3 groups to keep an eye on: home builders, financials, and healthcare. They've all got uptrends. They've all got bullish momentum. They all have structure. Most importantly, they're all setting up at or near the buy zone. As for these junkies over here in technology, I'll be waiting for a pullback. Do we get the pullback? Maybe not, but I would wait for it here. But the idea is find something like real estate. trend, right? You got a beautiful uptrend. You got a structure with a squeeze at the 21, and you got bullish momentum. You stack the EMAs, a few green 10x bars. When the basket is looking that good in an uptrend, and then inside of that basket, you have names like, shoot, it definitely ain't that. What's the name? Is it ABT? ABT. I can't think of the name right now, that particular one. But you got names like EXR. And when you have that structure to IYR, and then a lot of the names in IYR are setting up exactly the same, like EXR, like a PSA here. Those are going to be some of your best swing trades. So with your financials, with your healthcare, with your home builders, the ETF itself looks good, but so do the top, 5, 10 holdings in each of those baskets there. So that's what I suggest y'all keep an eye on. And that is what I have got for you here. Short and sweet, to the point. Yeah, this must be it. This must be the pullback of September 2021. The bloodbath of September. Oh, but that's what I got for y'all. Let me get caught up in the chat here. See what we got going on. And then you got some good looking squeezes over here. If you want to take a look real quick. Sherwin-Williams looks beautiful. That's part of the home builders there, as is BLD. Walmart looks great. I like Walmart a lot. Keep an eye on that one. Chipotle looks great. Got a great 4-hour squeeze in Chipotle. Check that bad boy out. Shop looks good. I think SQ looks good. I'm biased. I think Snap looks good. I'm biased. I think Dash is good. DocU. No lack of good looking setups. Just, I think where you could get your ass handed to you right now is you keep getting hot and heavy in calls that expire in 2 to 5 days. Just put yourself in a position where if the market does in fact pull back, and I hate to even use the word pull back, but structure your trades in a fashion, put yourself in a position where if we do in fact come in a little bit and then just say go sideways, where you're not going to get destroyed. I think the easy way to do that is just mainly give your trades plenty of time till expiration. Where things can get a little bit dicey is you're loading the boat and out the money calls. They got 3 days to expiration, and it just so happens that's the 3 days the market decides to come back. Nothing happened to your trend. The market is still bullish. You still want to be long, but you quickly ran out of time there. That is my advice. All right, let me get caught up in here. Hey, morning, Calvin. Morning, Drew. All right. You get some good questions here. I like it. Some good stuff. Yeah, Dominic, Dominic, you kind of bring up a good point here. And let's make sure we're all careful about, I like to do trade review where you look at your trades and where could I have done better? Where can I get better? What did I do well? What did I suck wind at? I like doing that. We want to be a little bit careful. We're not, overthinking things. But you bring up a good point. It wasn't just a pull back to the 50 there. It's the fact you had a brand new daily squeeze. So the one way I think I could have handled this better, in the mastery, we got long back here. We gave the trade plenty of time, so we sat through that push, we sat through that dip, and then we're taking profits over here. What I would have done differently in hindsight is we take that original trade in the mastery, and then when we were sitting over here with like 50% of max profit, what I should have done was bought back that put credit spread, pocketed the 50% of max profit, and then just roll into another trade. Because in the mastery, now Tesla's finally potentially making the move we're looking for. Granted, we took home a nice paycheck, but I think that was kind of our spot to add. And I think the reason I didn't add was we had that current position. Just a thought I had. But yeah, Dominic, the 50 was a good dip buy. 50 was a good dip buy. Hey, good morning, John. So, John, I like SQ. Just major observation here. Look at any daily squeeze where the momentum is declining a bit. In declining momentum on the histogram is, if the bars are dark blue, it's still bullish momentum, but it's kind of coming down a bit, right? You're losing a little bit of steam. The red bars is negative momentum. Yellow is still negative, but we're trying to turn the corner. This is a good study. That is what you got to expect until the histogram turns positive, and even before the histogram, or even after. But it tends to be a bit of a chop fest. So if you look at the recent daily squeeze from the same perspective, it makes a lot of sense that SQ hasn't really gotten anything going yet. The histogram, call it the gas tank, is just kind of steadily losing momentum here. Now it's trying to turn the corner. All of this to say, it's a great trend. It's a great structure. It could bring you into new highs here, but you got to be comfortable sitting through a little bit of that back and forth. AMD was very much, or really still is very much the same thing. Right, there's your brand new daily squeeze. It's a chop fest, and it makes a little bit of sense when you look at the gas tank. So with SQ, I like it, but I wouldn't necessarily take a trade that expires next Friday. Now, if it explodes next week, that's a great trade, but I think you do want to give it a little bit of time. And not just because we don't have a bullish histogram yet, not just because of that, we're not here. Right? We're not here. We're not here. The S&P 500 is not setting up at the buy zone, at that launching pad with its own daily squeeze. In other words, the entire market isn't gearing up for that 2, 3 plus ATR move. And I'm telling y'all, your best swing trading is going to take place when you can find SQ, but you're getting it when the market is also lining up here. And this is something I really try to stress in the mastery because this is a really important detail. That's when we're looking to make money. Now we're trading individual stocks, but that is the time you really want to look to move the ball forward. Those same good-looking setups up here, it can be a little bit tough. So take a look at some of our recent trades in the mastery. But the major thing I want y'all to take note on is remember this chart, right? We're setting up in a squeeze here, kind of end of August in the S&P 500. Then the whole market pushes, right? So for our trade in Facebook, it wasn't just Facebook setting up. It was the whole market, right? It had the market's wind at its back. Apple, all the same stuff, right? August 20th to August 25th, the market's gearing up here. The market goes for it. There goes Apple. There goes NOW. It's like clockwork. You find those good looking squeezes, but man, if you can find them when the whole market is gearing up for a good push, real estate setting up August 20th, August 25th, and then just boom. We had a trade in the communication sector. August 20th, August 25th, and then boom. Understand we're not there right now. This does not mean that SQ isn't going to rally into new highs. Just take that into consideration. That if the market goes sideways for a bit, SQ is probably going to go sideways. If the market dips for a little bit and then chops, well, SQ probably dips and then chops. But that's such an important lesson for newer traders. Regardless of the stock you're trading, so much of that timing component and so much of having a good win rate is really looking to get aggressive here, take profits into that push, and then take things down a couple of notches. Decrease position size, give your swing trades plenty of time to expiration. Number one job at this point, protect those profits, right? So we get long here, make money into the push, protect profits, right? Make money here, protect profits, protect profits. Well, we're in protect profit mode right now. It's the number one thing I think y'all should take into consideration. And the market could easily continue to rally. So the good news is hey, if I scale down in position size, I give my swing trades plenty of time to work, and lo and behold, the market never pulls back and it just continues to rip face here. Well, cool. I'll keep making money. But what I'm not going to do is wake up, the market's down 1-2%, and I just gave back an entire 2 to 3 weeks of progress, right? So, John, a long answer, but I like SQ. And then for coin here, y'all. So one of my rules is I need positively stacked EMAs, and we don't have them right now. So for me, I can't trade it if there's no stacked EMAs. What I will say positively about it, though, is you have a daily squeeze, you have a positive histogram. You could get a little push here. The tough thing about coin, there's no trend. To me, that's difficult. I mean, I know a crazy comparison, but look at Apple. That's a trend. That, to me, is very easy to make money on. Buy a pullback to the 21, find a daily squeeze. Just trading, for me at least, gets so much easier when I'm doing it within the context of an established trend. Where I kind of suck, and you got to know where you suck, is things of this nature. I got no edge here. How is this week any different than the last 1, 2, 3, 4, 5, 6 weeks? Doesn't mean there's not money to be made here. It's just not my particular pitch. Now, if coin can explode, rally for a month and a half, pull back, go into a squeeze, now I'm all about it. Now I got a little bit of, juice behind you, so to say. Hey, good morning, Matt. Matt, this is Taylor, not Chandler, but I'll do my best to give you my best Chandler impersonation here. What's your question? I'm waiting on this GS open order down by the 21 EMA. Matt, I like it. What do you got for expiration here, though? Yep, October 15th. I like it, Matt. And Matt, it's one of those things where you might not need until October 15th. This might dip. It might hold for a day, 2 days, and then just boink. No, there's the move into 430. Hey, who cares? Right? Time is your best friend. Now, sure, if you buy calls that expire next Friday and it makes that move into next Friday, it could be a home run. But in terms of a high probability trade, again, with the market not necessarily setting up at the buy zone, I like October 15th. You're giving it time here. If the market has to go through a bit of a chop fest, much, much more easy to hold that position. So I like that, Matt. There you go, Calvin. Thank you, man. Yep, that was the one. So that was another real estate stock setting up at the same time the basket was setting up. So we can take that comparison, right? Hey, here's the real estate sector setting up, and here's a bunch of real estate stocks setting up. They kind of go hand in hand. Well, to take it a step further, you can look at the vast majority of individual stocks and then just look at the market. It's the natural ebbs and flows. How we doing on time here? Let me just check Tesla real quick. I want a pullback. It's a weird position to be in. I'm long, but I want a pullback. That would be my preference. My preference today is I take some heat on the current positions. I don't know. We dip to 700, something nice and casual. Pick some up down there at the 50. AY, I love Snapchat here. I think it looks great. And for Roblox, not a bad daily squeeze. You do have stacked EMAs. You do have a positive histogram. All pretty solid here. Now, one observation I think you want to make about the weekly chart is we're range bound. Meaning for the last handful of months here, and let's exclude these 2 weeks. That was a solid move. Don't get me wrong, but if we were to exclude those couple of weeks here, well then, quite frankly, We're stuck in a range right now. Now, the only reason I'm bringing this up is that the major thing you might want to do here is make your trades short and sweet. To take a trade with, say, 30, 40 days till expiration, looking for that big push, that big breakout, could be tough here. Right? I think that trade is so much easier. You let it explode, then you wait for the pullback, then you wait for the next squeeze. But in the interim, as we're kind of trapped in that range, my suggestion is you keep your trades short and sweet. Meaning, get long at the 21, take your profits on that solid push into +2, but then get the heck out of here. Because this is, a stock that's liable to do nothing but this for quite a while. You know what I mean? So keep it short and sweet. A good example of this up until literally the last 2 days was Tesla. And this is what happens to a stock once it's trapped inside of a weekly squeeze. It can set up on the daily and it makes a good push, but it's quickly done and over with. And we're setting up, big push in, right back down. And we're setting up in a big push in, you're right back down. Now, the power of the weekly is that once you finally break and then you don't break down, now the party's getting going a bit. A good example of this is Netflix. Look at this psycho. All right, we got this big weekly squeeze. Mind you, this weekly squeeze is over a year old. Right? You're looking at a 1-year-old here. And we're getting ready to go for it and back down. And here comes Netflix. It's time to get long. We're going to break and back down and back down and back down. Well, now you got a solid break here. And if on the next little bit of weakness, we don't end up falling back into that range, now I think Netflix has got room to finally trend again. But there's just a good example of how nasty those weekly squeezes can be. They can be a total trap for a year or more. And then study the daily chart. Right? Look how out of whack this daily chart is. The only way to make it work is you get long at the 21, take profits, get the hell out. Right? Get long, take profits, get the heck out. These weeklies can be nasty. But now if you get the next pullback, and we're not dipping back into that same nasty range, Netflix has got room to go here. So there's somewhere I'm waiting for pullbacks everywhere right now. Terry, I think Domino's is looking good here, unless something has changed. No, nothing has changed. This looks great, Terry. I like it. Right? Great weekly chart, super bullish. Look at your 8 EMA on your weekly chart is a launching pad. So there was a good month we spent chopping on top of the launching pad. And we're doing very much the same thing right now. A lot of times, once you're on that weekly 8, look for the daily squeeze. Right? Think of the context here. A daily squeeze is already powerful enough on its own, but if it's taking place again on that major weekly launching pad, it can give you your next solid push. So from a very similar perspective, bullish weekly chart, we're chopping on the 8, and all we're doing is teeing up in a daily squeeze. So Terry, I do like this here for the potential continuation of the trend. Major consideration, though, is give that swing plenty of time. Right, look at this histogram over here. Chop fest, chop fest, chop fest, chop fest. Beautiful squeeze. Never broke any rules and never was something you didn't want to be long. But if you took it with a trade that expired in 2, 3, 4 days, you're fighting against the clock there. So as long as that histogram is still trying to go through its rotation, I think you give it 30 plus days. Then you got a better chance, I think, of catching that move. A good call out there, Terry. Prashant, so my checklist is there's a handful of different things on there that pertain to the weekly chart and to the daily chart. 2 things I'll give you right now. A little bit of free game for y'all. There has to be a squeeze. I don't take a trade if there's no squeeze. Like, simple as that. I'm not trading dominoes over here. Could be the most bullish stock in the market. I need a squeeze. I'm probably not going to buy that pullback to the 21. So I'm always looking for a squeeze, but I'm looking for daily squeezes in weekly uptrends. So there's one tip. Trade nothing but squeezes, but secondly, trade those squeezes in a weekly uptrend. And for me, a weekly uptrend, generally speaking, just means we're above the 21 EMA. So where I would have no interest right now in a daily squeeze would be Boeing. To me, this is not a weekly uptrend. We're under the weekly 21. So yeah, there might be some daily squeezes setting up here, but the path of least resistance is typically to the downside. So instead, I want a stock in just clear as day. Weekly uptrend above the 21 EMA. If I got a positive histogram in the weekly, that's a bonus. It's stacked EMAs, I need that. But I want that kind of weekly picture. And within that weekly picture, that's where I'm looking for daily squeezes. So I only trade weekly uptrends. And within the weekly uptrends, I only trade a daily squeeze. Paulito, Disney. It's been interesting as of late. I would wait for a bit of a pullback here. Ideally, I want to get long at the 21. Reason being is I can take profits on that push. So I would wait for a dip to the 21 EMA first before I got long again. But your daily chart doesn't look bad. What looks good here is your weekly. Good looking weekly trend. You got a weekly squeeze here. Very much like Tesla, momentum is trying to turn the corner. It could weekly squeeze for another month and a half, but I like that structure. I think ultimately this could fire long and give you your next push into new highs. So I like the weekly. I'll just wait for a bit of a dip here before I got long on that daily. Jordan, you got some GPRE? Nice, Jordan. Really nice. Good stuff. Really good stuff. All right, Jay. I'm liking it here. The weekly chart is bullish, so no issues there. Jordan, I like it. I like it. Right? Major thing. Histogram's not positive yet. It's a great setup. It's something I would get long, but just be ready for a bit of a chop fest until you get that bullish momentum coming in. Then you're gearing up for your push into plus 2 ATR. Call it $40. But I like this. Very nice. Good stuff. Good eye. Mark for Datadog. Datadog's been strong. It still is strong. I would take it on a dip to the 21. Quite frankly, you could take it here. I just prefer the entry down here. But you got a good trend. As of late, I would say you got a good trend going. All really bullish up here. And you probably got a great looking weekly chart. You do. I like it. I would take it on a dip. And if you get long here, just hold on through that dip because it doesn't change the structure. I like it a lot, though. The old dog. Rich, Citigroup said bullish yourself, currently outnumbered bearish ones by 10 to 1, meaning any correlation could. Yeah, Rich, I mean, good stuff there, but yeah, for sure. I mean, easy to think that we're in a market right now where folks are getting complacent. And the market loves to do this, right? The market runs off of human emotion, knows how we think, knows what we dream about, knows where we sleep at night. But yeah, the market can easily lull folks into, which I have right now, right? But you got to have it understanding the potential, right? But this is a buy the dip market, right? You got new traders just coming into the game and they're buying every dip and it's working. So it's like, hey, buy the dip, buy the dip, buy the dip, buy the dip, buy the dip. Naturally, that is going to lull folks into some complacency where it's like, hey, every freaking dip we get here, we're going to buy that and we're going to keep making money and do this until, eternity. One of these days, the market is going to say, all right, folks, here's your dip, right? Come on in. The water's warm. Let's do it again. Let's do it again. Let's do it again. and then it's going to freaking slam people. So that is going to happen at some point. When that happens, that's the game I don't like to play. Let's short the market now. That pullback is coming, and 12 weeks later, you keep grinding higher. So to combat against that potential, once we're up here, scale down in position size, give your swing trades more time to work, protect those profits. We might grind for another 3 weeks here. But when the morning comes, you're going to be thankful you made a few adjustments. Good stuff, Rich. Oh, look at that. I can look at the comments on the screen. That's pretty cool. That is pretty cool. Look at us. Boom. BNTX. I know JC. He pimp slapped this thing back here, I'm pretty sure. If we can get back above the 21 and then get stacked DMAs, then I'm all for it. I'm pretty much all for any daily squeeze with stacked DMAs. So for me and my rules, it's the one thing missing here. And again, with the histogram, I wouldn't want to trade it expires in 2 or 3 days. I'd want to give it a handful of weeks here. This all makes a lot of sense, though. Big, nasty push. I mean, we're talking a double. This is pretty crazy stuff. But ignore the fact that it doubled. Just more so focus on the price action. Big push. Crazy extended. Nasty flush to the 21. Total chop fest. Total chop fest gives birth to a brand new daily squeeze. Not today. Maybe not tomorrow. Maybe not this week. Don't put a time frame on it. But generally speaking, daily squeeze continues. We start getting more closes above the 21. Histogram turns positive. Your 4-hour, 2-hour, 1-hour, 30-minute charts look bullish. You'd probably get some continuation there. Moderna is a good example of this. Now, I haven't traded any of this, but Steven, this is very similar. Big, nasty push, right? It doubles. Nasty reversion to the mean. Chop fest. Brand new daily squeeze. You let it develop. You're looking for the continuation of the trend there. So with BeatNex or BNTX, I look at it the same way. A couple closes above the 21. Can we get a bullish 4-hour, 2-hour squeeze? Things of that nature. Then it could be ready for the next push. Good stuff here, y'all. Good stuff. Josh, are you looking at DocuSign or DOCN? Ooh, well, whatever DOCN is, that was a nice push. Find a squeeze, get long here, boom. Take your paycheck. So if that's what you were referring to, DOCN, that was a nice move. Obviously a bit extended here. But if you meant Docu, I like Docu as well. Yesterday was a little funky. I'm not sure what happened here, but it's a daily squeeze, and so Docu looks pretty sharp too. Calvin, for TXN, I like it. However, this is your weekly chart versus your daily chart. This daily chart, it just can't get out of its own way. +1, -1, +1, -1, +1, -1. Can't get out of its own way, and it is trapped inside of a beautiful weekly squeeze. The play here, Calvin, ideally, is out the money put credit spreads under the weekly 21. 185 puts, selling something of that nature. That way, all you needed to do is to just continue to chop, but just chop above the weekly 21. You could have been taking home, Calvin, nice, steady, call it premium paychecks for the last 1, 2, 3, 4, 5, 8, 12, 15 weeks here. I like collecting that out the money premium on these weekly squeezes because Calvin, think of our trade in the industrials. You buy some calls, you jump in when it's a great looking weekly squeeze. 4 weeks goes by. Hey, it's still a great looking weekly squeeze here, but you're eating premium decay. All right, we are opened up here. I'll keep hanging with y'all. See what we've got. Let's see if we can get to the 21 here today. Check out the Qs. The Q tips are pretty flat here. The Qs aren't even touching the 8 yet. The Dow. The Dow hitting that 50, and then the small caps. Now watch, right? Just based on, and let's be real, the market is down 0.25%, not even. So think of how lame this is, right? But this is what you want to take into consideration, because even that little modest dip here, that's when things can get a little bit shaky. So, looking at SQ, now mind you, I haven't looked at the SQ yet. It's probably pretty choppy here, right? This makes complete sense. It's trapped in a daily squeeze as the market is kind of stalling out here. If the market comes in a little bit, SQ probably comes in a little bit. That's why you got to give these trades time right now. It would make sense to me if AMD is chopping around. This is all bullish, right? It's all structured. As long as this holds, it's got a good probability of the move you're looking for. But to try to do that in 2, 3, 5 days, that's tough when the market's up there at 2, 2 plus ATR. So all makes sense to me. AMD's chopping. Snapchat is chopping here. SQ's chopping. Let's check out healthcare. Right? There's a big difference between the market's getting its ass handed to it versus things are coming down to earth a little bit. Just simple adjustments makes this painless. If in the mastery we bought out the money calls on healthcare that expired this Friday, yeah, this kind of sucks. With put credit spreads that expire in 30 plus days, it's like, hey, we might add to the trade on this cute little dip here. But Tesla, you son of a gun. Not a dip in sight here. Let me just take a look real quick. Come on, baby. Right? I'm long. And I want you to dip here. Do it up. Chopping about here. Let's take a look at a few of those groups you talked about this morning. Obviously, technology. I'm looking for a dip here. So I'll keep looking for that dip. For the semiconductors, I'd like a dip here. And this is not it. Chopping above the 8 EMA. That's just bullish. It's not a buyable dip. So this isn't going to do any good as far as getting NVIDIA come down to earth. That's how bullish the market is right now. NVIDIA's down 1%. It's like dipping to its 8 EMA. It's still extended. So no such luck as far as dips there out the gate. Financials are of interest here, and they're making my job easy. I don't got to rush, which I appreciate it. So keep an eye on financials, but no reason to jump the gun. Here we go. Here comes Goldman. That's what I'm talking about. So keep an eye on the financials. I like these names here at the 21. So come on down, Goldman. Come on down, Morgan. Come on down, JP. JP, you can just sit still. So that's interesting. Financials are looking sharp here. I don't got to get long now, but they're looking pretty solid. Healthcare is another group I think you can buy the dip on. Now, we're already long. Such a good daily squeeze. So with healthcare, how's UNH looking? Unfazed. Great structure. And then you've got the home builders, ITB. Making my job easy here. I don't got to rush. So we're coming down to the 50. So you look at a DHI. That's obviously going to be down on the day. Ooh. Well, Dr. Horton, I'm sorry, but you have lost your stacked EMAs this morning. I got to take you off the list. XLV, the home builders here. How's Home Depot? Home Depot setting up nicely, not taking off without us. Good stuff here. Good stuff. I think you have patience this morning. And if we get back above the 8, market probably shakes out whoever's trying to short it right now. You could get a nice pop from there. Under the 8, get your 21 EMA just waiting for a little smooch. Little hump day smooch. So that's kind of the early morning line in the sand here. Is that 8 EMA. So you keep an eye on that. For the Q-tips. Come on, Qs. Yeah, you're not even at your 8 yet. I think a good morning probably to do a whole bunch of nothing here, my friends. Come on, Tesla, puke it up. Puke it up. AMD's chopping. Snapchat is chopping. This is exactly what I'm talking about, though. Exactly what I'm talking about here. Do y'all get where I'm coming from, though? Because the market's been so bullish and because you buy everything, you make money. If you come into this daily squeeze here, as the market's up here at +2 ATR, and there's no positive histogram yet, and if you try to hit that without the money calls that expired this Friday, you're basically, it's game over this morning. Realistically, you're down 1%. It's a weak ass move. It's half of an average true range move. So it's literally nothing but noise, but you're wiping yourself out of the game. So simple adjustments. Market's a bit extended. All right, I'm going to give my trades 30, 40 days till expiration. That way I'm not getting wiped out here on average true range junk. Because that stinks. Yeah, give them time. Give them time. Here's Apple at like +25 ATR. I'm skeptical, though. I'm skeptical to think things actually come in here today. It's all too good to be true, I think. We'll see. We'll see. What's catching your eye so far here, y'all? What's looking good? What's looking good? So AMD, you're just doing more of the same here. Let's go through the list real quick. I love a morning like this where nothing is taken off without me, though. I get to sit back and chill. Yeah, Walmart, plenty of time there. Chipotle, Home Depot, very solid. Shop. I mean, even as good as Shop looks, it's liable to just chop itself silly until the market can push again. So, in the, out the money calls here, that's tough business until the market gets going. TXN, chopping. SQ, chopping. Snappa chatter. Home builders not looking too pretty today. I don't like Sherwin anymore. DoorDash is holding up. DocU. Let's all just buy calls on Monster. As I take a sip of one. Yeah, a lot of the same, though. A lot of names coming down to the 50 today. That's probably the best dip buy in the world. All right, Tesla, show me down 2% on the day so we can buy a dip. Boom. Not yet. Not yet. So let's just, for giggles here. Yeah, a $1.20 is not going to give you a squat. No, see. It won't even make sense. Not only are we extended, it just wouldn't make any sense here. 720, 710. Yeah, you gotta wait for a dip. You gotta wait for a dip. Stinker. Snapchat, AMD, XLV. XLV looking good. Tyler, let's check out the banks here. I mean, I like the financials. Great daily squeeze. You can be patient with it, I think. But old back. Beautiful. Beautiful, Tyler. Looks rock solid. Daily squeeze. 3-day squeeze, which, I mean, come on. That's bullish. 3-day looks good. Daily looks good. The weekly looks good. Let's keep the squeeze party going here. You got a 4-hour. I like it, Tyler. It all looks good. It all checks out. XYZ, good question. So, truthfully, it's not really my trade. Right, again, for me, it's just more so, all right, I'm just looking for those daily squeezes in an uptrend. But for oversold and overbought, that is probably when I would pull out the old Ready, Aim, Fire tool, which we can pull up here and see if we got a signal. Yeah, you're getting some signals here. So the Ready, Aim, Fire can be a useful tool. Say you don't have the Ready, Aim, Fire. Well, we can all get the squeeze, the original version at the very least. So, where the heck is my setup here? Your histogram is not positive yet, but the bleeding is kind of coming to an end here, at least on the daily chart. The weekly is trying to show signs of exhaustion as well. These can be so tough. My biggest advice would be give it time. Give it time. Kind of two extremes here, but to try to call the bottom and catch the reversal in the next 10 days, that could be difficult. To try to do that in the next 10 months, it's a much more high probability trade. So obviously two extremes there, but these for me admittedly are tough. So I don't know if that helps you out too much. Eric, what do we got for Hig here? The Hartford. The Hotford. Looks really bullish to me. Yeah, super bullish. Nothing I don't like about it. Squeeze, stack the MAs, green 10x bars, all good looking stuff. What's this? Financial services. So if it's in the financials, I like it even more here. It's a good one. All right, the market's just kind of herking and jerking near the 8 EMA. You can look at this market from so many perspectives. You got two sides of the fence, right? So this is the fence. You got the bulls right now who are just basically buying every single dip known to mankind. So there's your bulls. Now that kind of ties into what we talked about earlier here. Folks can easily get complacent. That's when things for those folks can get dangerous. However, there is the other side of the defense here. The other side of the defense is the group of traders right now trying to call this top, right? They think the market's extended. Granted, the market is extended, but you got the bears here who just want to top this thing off, right? They want to short this thing. They're trying to call the top. You get this whole group of traders here who every little morning we open up like this, they're trying to push their agenda. Right? Here we go. Here comes the flush. Time to get short. Time to get short. Well, the market's done a really good job lately of kicking those folks in the teeth. So you got to see it from both sides here. Yeah, everyone's buying every single dip. The market could slap them, but at the moment, the market is bullish. So if the market is smacking anybody lately, it's trying to smack the folks who are trying to short every little inkling of weakness we might get here. So you got to see it from both perspectives easily. We could be at all-time highs this afternoon, just as easily as we could be down here at the 21. I've got no interest in shorting the thing, that's for sure. Tesla. It's a start. It's not what I'm looking for, but it's a start. Snapchat is just looking great here. AMD looking good. And SQ is looking fine. Expect nothing but this right now. +1, -1. +1, -1. Whole bunch of average true range junkage. But I'm not seeing too much to pounce on early here. However, BLD is looking good. ITB is interesting here on the dip. What to do, what to do, what to do. What to do is probably nothing here. Sit back and watch. Eli. What do I think of NVAX? Let's take a look here. These bios can be a bit crazy. I think we traded NVAX back here. If only every trade could be like this one. Let's get long, and then let's just catch a massive gap. In the present moment, though, it's a bit too extended for my liking. So for my style of trading, I like the trend, I like the squeeze, but I gotta get long here. Because if I can get long here, I'm already sitting on profits. Just as importantly, if I get long here, I take this ride, and then it has to pull back again, I'm still profitable or I'm break even. I'm not going into a huge hole. Getting long up here, we can make a completely normal dip, but you're already in the hole there. So a lot of times a good entry is going to be your best friend. Like healthcare here. Healthcare, we had to sit through, I hate to call this a drawdown, but we sat through a couple of days of a dip here. But because of our entry at the 21 EMA, we're sitting on a profit still. It's not a huge one, but we're sitting in a pullback and we're sitting on a profit. Right? You get long up here near 2ATR, 2 days in a row, that position's going in the hole. Something like an AMD. AMD, for example, we're sitting on like 25% of max profit, all because we got long at the 21. You get long up here, it's a great setup. It's a beautiful squeeze, but you're in the hole a bit. So when I look at NVAX, it's just the first thing that comes to my mind is that if I did my job in the way that I approach trading, I'm probably trying to take profits this morning, trying to sneak out of here real quick. So I'd wait for a dip to the 8 or to the 21. Then you catch that, the next bot higher. Tesla. It's like the stocks that I want to pull back refuse to pull back. And then the stocks that I want to explode are just taking their sweet time. Eli Yeti should be good here, I think, unless something's changed. Ooh, interesting. Let me real quick, just out of curiosity here. Okay. Be patient. If the market were to close right now, like boom, it's Friday, it's 4 p.m. Eastern, the market is closed, I would argue, yeah, you sat through a nasty day here, but if the market closes right now, it's a daily squeezing, right? +1, -1. Now, granted, a close under the 50 today is where things could start to get a little bit soft in the short term, but as of right now, it is actually all a bit normal. It's made an average move just to the downside. There's a little bit more emotion when it happens this direction versus to the upside. But present moment, this little flush here is pretty damn useless. I'd argue it's just as useless as that cute little pop you had here. You got to look at price action inside of +1, -1 with a big grain of salt, because it literally is just average price action. It's noise. Now, would I get long here today? Not with a negative histogram, not teetering, on the cusp of being above or below -1 ATR. And I need my stacked DMAs. So I get a bit of a pop here, then it's probably right back into play for me. But that's how you got to look at these, right? Certainly can be a bit uncomfortable if you let it be uncomfortable, but Well, this is just as useless as that was. You got to look at it all with a grain of salt. When something is popping a little bit, it's like, oh my goodness, it's go time. Eh, probably not. And when something is dipping a little bit, it's just as meaningless. That is the beauty of the squeeze. Right, like SQ here today. It's meaningless, noise, junk, half of an average true range move. You got to get comfortable sitting through that. And I know a lot of you know my favorite example of this, but it's at Google. It's my favorite example because for a lot of folks in the options room, one of our bigger trades of the year. But look, it's doing what SQ is doing right now. It's doing what AMD and Snapchat are doing right now. And if that shakes you out, and if that gets you excited, and that gets you bummed out, it's all meaningless. But you get impacted by that. It's so much tougher to be here once the squeeze fires. So to me, the trade-off here is I'm going to sit through things that most traders aren't going to enjoy sitting through, and then more often than not, I'll get rewarded once the squeeze fires. Very seldomly, and I can just think of options room trades and or the mastery rather. In the mastery, we've had maybe one or two trades out of 15, 20 that have taken off immediately. We had Goldman Sachs hit it and quit it, and we had NOW. Otherwise, though, y'all, it looks more like this. Find an uptrend, find a squeeze, sit through the junk. Don't you dare get shaken out on average price action. Then you get rewarded. A lot of that is by design. They want to push communications higher, but they want to shake your silly ass out first. Then you get the push. You can't get impacted by that noise. Real estate, find a trend, find a squeeze, sit through the +1, -1. Don't you dare get shaken out on average true range noise, and you get rewarded. More often than not, that's what our trades are like. So SQ here, Snapple. Snap looks solid. AMD, solid. XLV doesn't even want to hit the 21 here. And Tesla. Make up your mind here, kid. 800 or bust. Upakara Samadhi, in terms of SQ and the crypto, the Bitcoin stuff, for me, it's just simply a focus on nothing but the structure of the setup. I never look at news. I never want to know economic, microeconomic, linkage, etc. Everything I got to know is going to happen here in the charts. Now, there's always a catalyst, I suppose, potentially. But the way I look at it is, I'm going to know when SQ is no longer a valid setup. And it's pretty much a close, under the 50. Now, maybe it's Bitcoin news that does it. Maybe it's, vaccine news and boosters or whatever the case may be. But for me, it's purely about the structure. Because a few trades come to mind here. Right? We were sitting in the options room. This is a couple of months ago. But we're sitting in the options room. I had just jumped on the mic. We did a trade here on NVIDIA. Was it over here? It might have been. Anyways, we took a trade on NVIDIA, and some news came out. Where's the 4-hour squeeze? For conversation's sake, let's say this was it. This might actually be it. But long story short, we took a 4-hour squeeze, so our trade was based on that structure. And I think on this candle right here, some news came out. And a lot of folks in the options room are, what are we going to do about this? This news could impact it, yada, da, da, da. Structure. Whatever the news was, clearly, the powers that be here never really quite cared. And then you get the move you're looking for. That's why I like to focus on structure. If whatever the news was had a real impact, well, when NVIDIA's flushing down towards 124, at that point, it's pretty obvious. But I've just found that if I pay attention to news or I let an outside thing get in between my ears, a lot of times I'm taking exits on trades where I come back a week later and look at the chart. It's like, why did I get out here? Nothing happened. I got long SQ because it was a clean daily squeeze, and when I got out of the trade, it was a clean daily squeeze. That's just my mindset. Tesla, the one thing that doesn't want to dip here today, huh? But there's your market holding up just fine at the 8 EMA. So I'm curious, if we go sector to sector here, who is losing, who's winning? Technology is down 0.5%, but quite frankly, not a damn thing has changed here. We've had inside days, basically, for the last 1, 2, 3, 4, 5, 6, 7. Yeah, we're stuck. There's nothing happening here. So technology is down a bit, but it's noise for now. Your financials are flat, so that's not doing any good, not doing any harm. Energy here, I mean, who cares? Help? I don't need help. Well, I need help, but I mean, energy I'm not interested in anyways, but for today's purposes, it's actually up 1%. The industrials are flat. That's not doing any good, not doing any harm. Healthcare is dead flat. Transports are flat. Who's stinking it up here today? Semis, there you go. Semis are down 1.5%, dipping towards a 21. Utilities are up. Seems to me that's the ugliest you got here today is the semiconductors, unless I'm missing something. Real estate, but that's not really going to do too much. There's the guilty victim today, the semis. However, I've been waiting for a dip here. And Nvidia is down 2% and has dipped to +1 ATR. Still extended. Ovi, I don't really look too much at volatility in terms of, pointing me towards a particular strategy. And not to say it's the right answer. That's just my approach. I don't really take that into consideration too much. Speaking of volatility, though, we're getting a cute little pop here today for VIX. But it's already coming back in. That's your number one sign the market is going to brush off any selling and either hold up or just pop, turn the corner, and go higher. You're going to get these spikes in VIX when things are a little bit quote unquote soft in the morning. Where the market starts to get ugly is when VIX keeps pumping. But you get these little pops and then back down it goes. It's usually all to do with nerfing. As we're down a whopping 0.5%. There we go. Come on. Come on down, Tesla. Come on down, Tesla. The water is warm. Snapchat's doing a whole bunch of nothing here today. And SQ's probably coming down to the 50. Which if you're not long SQ already, I would wait for that. Maybe it bounces here. So yeah, it bounces from here. And then maybe you take it up here to 21. But if you've liked SQ and you want to swing it, I say, hey, hold off here. If we can hit the 50 and hold the support, that's a great dip buy. And it's a great entry above the 21. So as we're kind of sandwiched in between the two here, I think you wait. Healthcare is looking solid. Ryan, I like shop. I hate the spreads. I hate the spreads with a passion because man, can this thing move once it gets moving. And you've got a great daily squeeze here. So I love everything about the setup. I just don't like the spreads. That's the only downside here, at least for me. Setup for setup, though, it looks great. But notice it's doing nothing here. And you look at what the Qs have done for the last 10 or so days. They've done nothing. And the S&P 500 lately has kind of done nothing. this all just goes back to that earlier discussion. Once the market's up there at +2, give your swing trades time. I like shop. I don't like shopping to Friday's expiration. I like shopping to October. That's my thinking right now. Eli, FSLR was interesting the other day. See if it still is. Oh, there it goes. Waiting for nobody. So in a perfect world, Eli, you're finding that daily squeeze. You're building your position in the squeeze near the 21, and you're taking profits on that push this morning. Otherwise, I'm waiting for the next dip. I used to trade this thing left and right back in the day. She was pretty good to me too. I think my best trade on First Solar was a total earnings gamble. I bought calls before earnings, which is just stupid, but it worked. Hold on here, guys. Answer a quick text. All right, good to go. Yeah, that's a little extended though here. So wait for your dip. Man, the market is just sitting here flat. So it's an interesting time, right? There's certainly that group of traders who is just buying every single dip, including this morning's, and that is going to bite them in the butt at some point. But there's also the group of traders who are convinced the market has to pull back here. The market has to collapse, and they're trying to short every morning that looks like this morning. So it's all a matter of who does the market want to screw, pretty much. And your Qs are just holding up here. This is a whole bunch of chop. Whole bunch of chop. SQ, Snapple, AMD, XLV, and Tesla. All right, Tesla. Let's see if you can get going here, kid. Come on in. Come on in. Yeah, Tony. Healthcare looks solid. I think there's a lot to be said right now for, obviously, look for viable opportunities in technology and semiconductors, the quote unquote sexy stuff, but don't ignore these trends happening elsewhere. I mean, healthcare has been given off for just forever here. Real estate, that's not an exciting group in the market, but that's a damn good trend and a good daily squeeze. So I'll take that next dip on Apple. I'll take the next dip on Nvidia, but I'm also going to be looking elsewhere. And I do think healthcare is certainly one of those spots. Financials. We can be patient there. Home builders. We can be patient here as well. Yeah, all good stuff. All good stuff. Amazon has got no dip in mind. Google, Facebook. I ain't going to cut it. Microsoft. Microsoft might be interesting here. Potentially. It's definitely interesting if technology continues higher here. You got a great daily trend. You got a bunch of bullish momentum, and you're finally setting up here at the buy zone. Only thing missing is a brand new daily squeeze. That's about it. So if we look at maybe a 4-hour chart, see if we got a squeeze here. We do, but not a squeeze that would get long. So Microsoft could be interesting over the next week or so. But for the rest of the gang here, too extended. Too extended. So I think we'll see how the rest of the morning shapes up. Probably a good day to be patient, though. Probably a good day to be patient on adding a bunch of new exposure. Let's try to get a better sense of which way we're going to go here. And then with your open positions, it's just a matter of, are they breaking any rules, or are they just daily squeezing? And you want to do a good job of not watching that price action. It'll drive you crazy. So now look at AMD here. I got no complaints. It's a daily squeeze. It's pulling back to the 21. But if I sit here this afternoon and I watch every little tick on a 5-minute chart, I'm going to start to get into my own head. Man, we're breaking down. This is getting ugly. Da, 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 da. In all reality, it's a dip to the daily 21. So as long as your daily squeezes or whatever it is you're trading, as long as they're not breaking rules here today, I suggest in a sense you try to distance yourself. It's easy to go crazy watching a chop fest, especially if you got some skin in the game. Snapchat's completely normal, 100% normal. But if I'm sitting here watching a 5-minute chart today, I'm feeling every little bit of that. But it has no impact on the structure at hand here. So Snapchat's making my life easy today. Healthcare's making life easy. AMD's making life easy. Tesla's doesn't want to pull back. And SQ could be the one interesting one here today. But even still, you got to look at it with a grain of salt. It's less than an average move. So if I tell you that SQ is liable, I'm just going to pick a number here. If its average true range is $10, so any given day, it's going to go up and down $10, and that's just completely normal business. If you're down 6 this morning, nothing's happening here. Now, granted, SQ keeps flushing. We're sitting here today at 255. I'm probably thinking about cutting the trade, but you don't fill your head with those thoughts until that happens. In the interim, you let a daily squeeze. Then you manage it elsewise. So really, if I was long SQ here, which I am, probably set an alert at 257. You can have an alert at 272 in case it just wants to turn the corner there. But otherwise, this is all it's all junk. It's all choppy junk. Yep, we're chopping so far. So what time is it? I got to be in the options room here in about 15, 20 minutes. Let me see if we got any more questions, and then I'll cut you all loose. Eli for gold. Listening to John last night, I know we got a weekly squeeze here. So let's take a peek. You do have a weekly squeeze. It's all too neutral for me. So when I look at the daily chart, kind of losing steam here. No green 10x bars. So momentum is not bearish. It's just kind of lame. And there's no stacked DMAs. So I wouldn't say it's the most bullish daily chart going. And while we do have a weekly squeeze, I look at this from the same perspective. It's all just really neutral. Histogram's negative. No green 10x bars. No stacked DMAs. Just based on that, I would think that for a while here, gold is probably liable to just continue to do more of the same. Chop, chop, chop back and forth in this range here. Remember, you can use other weekly squeezes as kind of a visual reference here. Tesla was good for nothing until the quality got a little bit better. By that, I mean back above the 21. Histogram's trying to turn the corner. Histogram goes positive. You have stacked DMAs. Now I think you're looking for a bit more direction. Just based on the current chart, gold strikes me as something that could be doing exactly what it's doing here this week for the next 4, 5, 6, 8 weeks, really. Could be wrong, but just with the tools at hand here, that's what I'm seeing. Good question on SQ. I tend to want to wait. Now, there's a point where you got to cut the cord. If we're down here at 250 and a half hour, I'm probably not waiting until the close to see if we can bounce. And quite frankly, even if we do bounce, I'm probably still happy with the exit. That shouldn't happen. Now, if we come down here to 257, yeah, I'm going to wait a bit because all you got to do is bounce half of an average move and it's a completely normal daily squeeze. So I would be patient there. You want to be a little, you need to have that good mix where you're not selling yourself a dream. It's like, all right, we're down here at 240. I think we're going to bounce before the close, but you also don't want to, get shaken out, so to say. And please remember, we are not the only, there's 100+ of us right now. I promise you, we're not the only ones looking at SQ coming down to the 50 today. Every algorithm, every computer knows, all right, they're watching. So they got a number of tricks up their sleeve here. If they choose, they could flush it, shake everybody out, and then bounce it back up. There's a long list of games they could play here. But I would wait until as close to the close as possible, or if it's just, an open wound, then I would take it off. Then there's other things you take into consideration. Well, is this a 10% position size, or is this, a 2.5%, 3% position size? How have I been trading as of late? If I've been trading like crap as of late, I want to keep a tighter leash around SQ's neck here. I don't want it to dig me a deeper hole. If I've been doing my thing lately and really kicking butt, I can give it a little bit more leeway. Then I'll take a look at my open positions. Are all my open positions just getting slammed here today? Like, is everything breaking down and losing structure? Well, Snapchat's not even close. Healthcare looks damn good so far. And AMD is just basically doing what it's been doing for the last 2 to 3 weeks here. So all different things I think you take into consideration. How have I been trading as of late? Have I been stashing away some good profits, or have I been digging a hole? How much exposure do I have? Is SQ a big whopping position? Well, then guess what? I'm probably sitting here today ready to pull the trigger. Those are different things I take a look at. And then, excuse me, time till expiration. That's important as well. And then lastly there, to kind of finish up that discussion, I'm also going to look at my spreads based on, where are we at here in relation to the max potential profit? And this is a goal of mine in our mastery. If our losing trades can be less than or equal to, but ideally, if our losses can be less than the max potential profit, that's how you can have consistency. Where, for example, if we're going to lose $100 per contract on SQ, but then on XLV, AMD, Snapchat, we stand to make $150, $200 per contract. To me, that's pretty solid. And I think that's important with the put credit spreads. You really want to avoid taking that max loss. And to really, I think, create consistency, you want to keep those losses less than the max profit. That way, when you book a profitable trade, that you want your winning trades to have the opportunity to move the ball forward. But imagine we take home our profit here on SQ, and all it's doing is just recovering our last 5 losing trades. We're not really going anywhere, right? It is an emotional game for sure, for sure. But a lot of that is, it's mindset. We ultimately have the decision and the ability to decide what are we going to let interfere with our our mental, with our headspace. I just came to the conclusion years ago, I'm not letting anything in this box impact my emotions, because quite frankly, the quality of life sucks. So very easily I could be all antsy today. Oh my God, this might be a losing trade. That doesn't happen. No one takes losing trades. Oh my God. But I could also be sitting here all cocky, all pumped up, excited when it's popping over here. And until you're out of the box, this is just as meaningless as that little pop right there. So imagine every time we're touching +1 ATR, you're getting all giddy. Right? You're getting euphoria. I took this trade. I nailed it. I'm going to make profits. Right? I put it on Instagram, all that bullshit. And then it pulls back and now you're all depressed. And it's like, good Lord, at some point, it's a bit too much, right? It's a bit too much. Snapchat, Amdem, and Tesla. Tesla. Alrighty, y'all. Good stuff this morning. We put in some good time. I appreciate y'all tuning in and sticking with me. And I wish you the best of luck rest of today. And let's see, tomorrow's Thursday morning, so if y'all would like, let's hop back on the mic, 8:45 a.m. Central, do a bit more prep, and then Chandler's got you. He's got you into Friday. All right, y'all. So be good, be patient, be disciplined. For those of you in the options room, I will see you in about 10 minutes. Be good.